The following is a presentation of TFNN. Live at TFNN, the Money Masters.
Let's go to Carlos in California. Hey, Carlos, what's going on?
I want to thank you guys for all that you do for TFNN. I've been a tiger for over 10 years. Actually, started listening to you before I even speak a word of English.
Oh, really?
And the thing that captivated me was when you make like, rawr. I was like, wow, what is that?
That is so cool. And where are you from?
Take it serious. I'm from the south, actually the northwest part of Mexico.
I love
right
it.
next to Guayabitos.
Okay.
It's close to Puerto Vallarta.
Okay, cool.
Yes, and I listen from there, and then when I arrived here, I married my wife, and then I keep listening to your radio station.
That's a beautiful thing, man.
It's a great thing.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Okay, good afternoon, or good morning, folks. This is Jay Leno. Larry Pesavento setting in for Tom O'Brien and Steve. As you know, they're on the roads, and I shouldn't even have said Jay Leno. I should have said somebody that was actually good at a talk show host, but we don't have those anymore. Anyway, what I wanted to focus on this today is we need to talk about crude oil, and the first thing we should do is last week we talked about the crude oil getting ready to break out. We had that big move above the 103 per barrel level, and then we actually popped up overnight on Sunday and gapped up, and we've continued to move higher. When we had that pattern that we had last Thursday on the show, what was happening is we had that really wide range bar, going up into that breakout area, and that was telling you that it did want to go higher, and it certainly got gapped up, and we've gotten as high as, I believe, just under 109 so far, and our targets look higher than that. So that's what we want to keep in mind. The crude is still broken out to the upside. It's also being followed by gasoline and also by the heating oil futures too. So all of those are breaking out. We've also had breakouts in the gold and the silver, out of those congestion ranges. So that's also telling it. This is nothing new because we had that big commodity DBA making a 61% retracement way back in around December 19th. So it's been a couple months now that these things have started to move higher. How high they're going to go, we really don't know. But today's show is what I want to focus on is, where we are in the stock market, because we've been in this pretty much same range in the overall stock market, looking at the New York Stock Exchange Index and also the S&P. It's only been the NASDAQ that has been the leader of the pack in here. So the first chart I'm going to put into Tiger TV today is from Waverly Advisors, and it's basically showing the Russell 2000 versus the S&P 500 index, and it shows that the Russell is been far better than the S&P, and that's usually not a good thing because it is a place where you have smaller caps are stronger than the larger caps, which should not be in a projected bull market. So we'll see we'll see how that ends. But the best way to look at this is to see where we're going to be and where we've been with these divergences. So the best way to really look at that is to see where we are now with the divergences, and then also take a look at them where we were in the past, where we can go back and look to see where we were at any particular time to prove that these divergences are actually really occurring. So the first one I'm going to use is the Dow Jones Transportation Index, and it's going to show you the going back over a year to how the market actually increased versus the transportations. In other words, the transportations were going down, and the NASDAQ was going up, and that's what we have going on, right now. That's what's occurring. This is occurring in utilities. It's occurring in the Dow Jones Transports. It's occurring with the New York Stock Exchange Index, and so these are the things that we want to be watching, because these divergences could really mean something. Now, in order to really take a look at this, we need to go back in time. And what I've done is I've gone back to 2007. And of course, all of you know that we had a pretty big move into 2007. And the chart that I'm going to show now, I think, is worth a lot as far as the what it shows technically. And basically, what you're looking at on this chart, and I highly recommend you take a look at this, because this is the New York Stock Exchange Index daily chart from 2007, and you'll notice that the NASDAQ, which is the red line, had been continually making higher highs from the July level, just shattering those highs, whereas the overall market, the New York Stock Exchange Index, was making a double top. And the correlation on this is, better than 90%. But during that time, the rate of change of the NASDAQ was incredibly strong. And guess what, folks? It's just like it is now. We're having a tremendous strength in the NASDAQ, and yet we are having a very, very laggard strength in the New York Stock Exchange Index, which is a really true index. The NASDAQ is only 100 stocks. It's cap weighted, so when you got stocks that are $500 like Apple, they hold a lot more strength. I think Apple is 23% of the NASDAQ, as I recall, and that's one of the reasons why we want to keep an eye on this particular thing, is because this divergence is really, really quite quite important as far as where we are in the market right now. And we also need to look at the breadth. And I brought this out several weeks ago, and I'm going to bring it in again because it's still very important. And that is the fact that the breadth of the market has been deteriorating. In fact, from where we sent it last time, the breadth is actually just had a little technical problem here. The breadth has actually not done anything. It hasn't improved as the market has made new highs, and that's come from the McClellan oscillator, and that's telling us that stocks are still heading down, even though they look like they're going up. It does look like they're heading down. If you went back and you looked at this in 2007, where we were, you'd be looking at the same type of chart, where you had declining highs versus your lows, and that's telling you that that's not a good sign in the market, and so you should be, very, very careful, being bullish in here. I know the market keeps going up, but the only one that's really keeps going higher is the NASDAQ. That's the one that really is moving the things the way they go. And so, these are just broad indicators of what the market's doing. You can get, a lot of different charts to invalidate this or validate it. It doesn't make any difference. But how I look at it is I just go back and try to keep it as simple as possible and say, okay, what was happening during this time? What is happening now? And that's basically, what we're looking at. And so we'll see. The whole world is bullish Apple. In fact, in all of my years of doing this commodity and stocks and everything, the only time I can remember where everybody was bullish a stock was a stock called National Video, and this was in the mid '60s, and it's when color TVs were coming out, and everybody bought this stock. I mean, this stock was going crazy. And the fellow that owned it built a huge mansion right next to Bob Hope in Palm Springs, and he built a house bigger than Bob Hope's mansion. However, before the house was finished, National Video had gone bankrupt. Now, I'm not making an analogy with Apple. I'm just saying that things can change. As you well know, things do change. Look what happened to RIM and BlackBerry. There's so many of them, but this is probably not going to happen to Apple. It's just the whole world is bullish Apple now. So if you're in Apple, at least put a stop in at some place, because maybe it might not go up forever. Now, all of this that we're talking about today is a lot of it is related to what's happening with the U.S. dollar, and we spoke about this on Wednesday's show. We spoke about it on Thursday's show, and I'm going to bring it back again today because of the fact that, it's so important, because so many people are watching, what's happening with the euro and the dollar and all of these things. And we talked about the euro getting down, the dollar index getting down to this 177 level, and we've certainly set up a place now where we have a potential Gartley forming coming off of the D point, and that would bring us down into this level of about 177 is what we've been waiting for, for quite some time. Whether it's going to hit it exactly or not, I'm not sure. But the the cycle low came in, and now we've broken that, and that tells us that we're at least heading down to the level of around 77. That's about another 1.5, and we will relate that to the euro, because the euro is 53% of the U.S. dollar index, and so we need to take a look at the euro on this. Now we've already mentioned that the euro, once it went above that 134 level, that it had a really strong probability of getting up into that 136, and that's nothing more than the larger AB equals CD pattern that we have forming in the euro. And so these are the things that we're looking at. These things are moving quickly, but they're not moving crazily. I mean, they're very, very normal. It doesn't look like there's anything that looks like any really wild gaps. Nobody's actually panicking, or anything like that. But the dollar is actually under a great deal of pressure. And you have to remember now that the dollar versus the yen, which is something that we've been watching for a considerable length of time, has really continued to take off, and we've gone above that 80-50 level in the index for the dollar versus the yen, and that would tell us that we are looking like we're able to even go higher on this. Now, the one thing that I want to bring out here, I just posted the U.S. dollar versus the Japanese yen on a daily basis going back about 8 or 9 months. Now, on the short-term basis, this looks like, it's the tower of strength. It looks like, gold going to 1900. But what we really need to do is, in perspective, we have to take a look at, what's happened to this over a long period of time. And in order to do that, we need to go back as long as maybe 30 or 40 years and pull up a chart just to see how much the Japanese market has moved against, the yen has moved against the U.S. dollar. And you'll see that over a period, we're going back from 1970 to where we are now. So it's a period of 42 years. We have gone from 360 versus the yen down to 80 versus the yen. So you can see the difference in this. Now, we've got to take a little break here to pay a few bills for our vacationing sponsors of Mr. Rhodes and Mr. O'Brien. Wherever they are, they're probably in Boca Raton. No, they would probably be in Bali by now. Anyway, 877-927-6648.
Gold silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story gold mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Okay, we're back, folks. And this is Larry Pesavento sitting in for Tom O'Brien and Steve Rhodes as they're doing their road show, and I hope I can keep up with it. I feel like I'm trying to follow Johnny Carson and Ed McMahon, so we'll see what we can do. Right now, what I've done is I've posted the chart for the euro on a daily basis. We've seen this, many times. Once the bottom was made down there at that 126 level, that was the 618 on the long-term weekly chart, and then we've had a correction. And now we're in the CD leg of the AB equals CD leg, and that would take us up to the 137, area. Now someone commented, "Boy, gee, that's a long way away, 137." Frankly, it's not, because we've gone from basically 130 to 134.50 this week. For the middle of last week to this week, and so just about another 4 or 5 more days of this type of move, and you would be right up at that 137, 15 level. So, that's where I think we're going. And then if you equate that, to what we're looking at the dollar index coming down, to around the 77 level, where it's trading at 78.30 right now, that's where the two levels would come together. And when you take it to an effect that, what's happening with the Japanese yen, which we've said all along that could be the real sleeper for the year. And the reason why I said that is the fact that it had been in such a, long-term bear market, going back 40 years. And all I'm looking at is the pattern, and we made a big butterfly pattern in the Japanese yen, at that point, and it really made it hard to, do the, the analysis, because the ranges were so difficult at that point. But now they've become more, tradable. In other words, they're not in these, 700 or 800 point ranges like we had, a few months ago. We're more, more easily able to do this without, calculating, the numbers. I'm losing my train of thought. I'm sorry here, but what I'm just trying to say is the dollar has a really good chance of making 7,700, and we have a good chance of that euro making that 137 level. Just based on that, by this time next week, we could be there. Now, there's a possibility it could reverse from here, and fall out of bed. But frankly, you can't base it on that. These patterns are so predictable, and they're not 100%, but it's the best of anything that I've seen. So I would just hang on here and look for some more at that 130, 137 level. Once it went above, the 130, 350 level, 134. That was telling us that it really wanted to go higher. And that was the same thing that happened in crude oil, folks. That first chart that I put into Tiger TV today, showed that 103.50 per barrel in the crude oil was certainly good. And the main thing that we're looking for is to, see if these things continue on. And that's what happened. Crude oil gapped up, and it made it really difficult to, see that it was going to go lower once it gaps up like that, overnight on a Sunday night. So just keep in mind that we're looking for that 137 level in the euro, which equates to about the 77 level in the New York, the dollar index. Okay, so we've covered the dollar. I think the next thing we really need to do is to get in, and we have a break coming here, I believe, pretty soon, but we need to take a look at the Chinese market, and the reason why I think that's important is the fact that everyone said the Chinese market was going to lead us out of this, and I'm going to put the chart for the ETF for the Chinese market, which is basically the Shanghai market, and you'll see that it's completing a bearish Gartley. This market has been in a bear market since 2008. And if you compare it with what we've done here, the Chinese market is just in a very, very bearish market. Now this could change, it could explode to the upside, but frankly, we have lower tops, lower bottoms. This has every indication of the market wanting to go a lot lower as opposed to going a lot higher. That's just common sense here, and this would be a good place. That this is where it's supposed to turn. Now, this is the same pattern that we're having all across the world. We're having this all across Europe, in London, Paris, the UK are all the same, and of course, Italy's market's a lot weaker, and so is the Greek market. But they're all in downtrends. The only market that's in an uptrend is the NASDAQ, and I don't think that's going to stay for much longer. But, that's my opinion. I'm looking at all of these different factors. Volume is bad, and so we're going to be able to see if this is going to go through. When we get back, I want to talk about the bond market because I think we're holding up incredibly well. 877-927-6648.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. TFNN has an exciting announcement. As part of our Go Long America contest, Tom O'Brien and Steve Rhodes will be hosting 4 live in-person workshops that are absolutely free to attend. Denver on February 21st, Spokane on February 22nd, San Francisco on February 23rd, all from 6:30 till 9:30 in the evening, followed up by Boston on Saturday morning, March 3rd. Steve Rhodes will show you how to understand the power of 1% and how to master probability, along with avoiding getting stopped out of trades early, while Tom O'Brien will speak about the intense trading power of Tiger Gartley and butterfly patterns. All of these workshops are completely free to attend. Come see Tom O'Brien and Steve Rhodes live at one of these free workshops as part of the Go Long America Tour. For more information and to reserve your seat today, visit the front page of TFNN.com and click on the Go Long America Tour banner. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, this is Larry Pesavento setting in for Steve Rhodes and Tom O'Brien. And the next chart we want to look at in Tiger TV is one of our favorite, at least from my perspective, and that is it's the Treasury bond chart. And we are looking at the daily T-bond chart, and we have been in this range, really tight trading range now for quite some time, bordered between 145 on the upside, which is the 786 off the December high, and the 50% level, which is the 141 level, which is coming off the November low. So we're in this zone here. We're not quite halfway through it, but the amazing part is for the last 3 days, the market has actually, interest rates have been actually going down, bonds going up, which with stocks going up, especially the NASDAQ stocks, it's telling you that there are people still interested in buying bonds, and all we would really need here to get the market out of this trading range up into this 149 level would be another flight to quality, like somebody backs out of a European agreement, or Iran does something stupid. Any type of a flight to quality or safe haven could actually do this, and that would get us up to that level that we've been waiting for so long. I know I get people saying I get tired of hearing this, but you got to keep focusing on the trades that you think are going to be the best, and that's what we look at each day, because someday you might come in and this is already broken down and we might miss it, but we want to be prepared also to get in at the best possible price if we're able to get our price objective up there, which would be equivalent to $16.80 in the TBT. So that's what we're looking for at in the Treasury bond market, and I'm actually quite pleased that it has held up this week, given the fact that we've hit 13,000 in the Dow, and we made new highs in the NASDAQ and slightly new highs in the S&P, and a very slightly new high in the New York Stock Exchange Index. So all of that, tells us, we are in that zone of where we think we are getting ready to, have a pretty significant move down in stocks, and then also a significant move down in Treasury bonds also. Now, the next chart that we need to look at, because we're looking at the overall, status of the market, and that is at the VIX index. And every time the VIX index gets down into the 16 level, which if you go back through 2007, 2008, it's been in that 20 to 16 level. And each time we've done that, we've had a tremendous move out of that, where the market is actually, the VIX index is actually tripled in value, and we're down at this level now. So if you add up all of these things and you did a T-square, like if you're in business school, do the pros on one side, cons on the other, I think it would be really difficult, to form a bullish opinion on the stock market. However, the stocks are still higher, so the T-square doesn't really mean very much. It's just alerting you that, we're at the point where, something really significant could happen. And we've been here before, and we'll probably be here again. We might even be here next week. This might go sideways for another few weeks. I don't know, but I do know that within the next, 30 days, we're looking at a Bradley model that is getting ready, to turn down. And I'm going to, bring it up one more time because, several people have asked me to take a look at it, over a longer period of time. And I'm just going to bring it up, what it's done over the past, if I can get it to fit everything in there. There we go. This gives you the whole model for all of last year and what the prediction is for this year. And remember, this is not a foolproof prediction, folks. This has a probability of around 70%, but it is a very good indicator, for predicting what the market's going to do. I would put this Bradley model up with any economist's prediction for the year, and remember, it does it a year in advance. I was fortunate enough this past week to spend time with one of the top 5 astrologers in the whole world, and he was instrumental, in helping me understand the Bradley model many years ago. And we went over it, and it really is an incredible way of economically looking at what the economy is going to do based on these cycles that we have, running around in the sky. So the other, we did a lot of things, but one of the things that I was particularly interested in was the new moon and the full moon phenomenon with stocks. And we have data that goes back well over 100 years, and we have the relationships of the new moons and full moons, and we can quickly test these. So just doing a quick test of 30 years, it is really an amazing the bias that the new moon has versus the full moon. The new moon has a tremendous bias. It's a bias of 61.8% over the full moon. That's over the full moon. The new moon has a 61% bullish bias over the full moon. Now, the way to do this, I'm going to expand on this at another time. But right now we have a caller in. Victor, are you there?
Yeah, I'm looking for PEG.
PEG. Can you tell me what that is?
PEG. It's a utility company.
Yeah, PEG, I get it. It's a utility company. So that should be a stock that should be acting a little worse than the market. Oh, this one certainly is.
You got volume yesterday? Yeah.
I can put up the volume. Oh, wow, it had massive volume, but the stock didn't do very much. I mean, it did not, it's actually, if I had to buy a stock, this would probably be one I would be looking at because it completed.
That's what I'm wondering.
It completed a major Gartley down here. You don't want it to go below, 29. I'd say 29.5 would be the lowest that I would want that stock to go to. Pardon me?
Should I wait until it gets down there? You think it'll get that low?
Yes. I think if it got to that 20, that would be the 786 retracement of this whole move. And if we're correct, the actual price is 29.60 is the number I'm looking at.
Because it pays a 4.5% dividend, so I don't know. In the summer in August, it went down to 21.
Okay, Victor, let me tell you about dividends. Sometimes they cancel them, and it goes from 4% dividend. Yeah. Okay.
They
Well,
raised it.
They just raised it. Well, hopefully
Yeah,
they won't. Hopefully they won't take it away from you. All I'm saying is you don't want that stock below $29 a share. That's the bottom line, in my opinion.
Hey, it's been that low though around November, and in August it went all the way down to I think 27. What's that telling you?
Well, all I'm just looking at is the pattern, and the pattern that we made there is we went from the low to the high, and if we go below that 786 at $29 per share, that's not a good sign. So you only have to risk $1.50 from this level. That's not a bad situation.
If it breaks through though, where do you think it can go to?
You mean to the downside?
Yeah, what's my after that?
Oh, it can go all the way back to 21 or even lower.
Oh, okay. Yeah, because I'm expecting the government to devalue the dollar over the weekend or something by 40%.
No.
You know, if the government can give it to you, they can take it from you.
I'm 100% sure of that, but believe me, in order to do that,
you better hope Cheney
the news
and
will leak out and the markets will go crazy.
You better hope Cheney and Bush ain't hanging out lighting their farts this weekend, you know? Have a good one.
Hey, thank you for calling in. We've got a call from David in Clearwater. Are you there, David?
Hey, Larry. How are you, sir? Long time no talk.
Yes, how are you? What can I do for you today?
Yeah. I was wondering if you wouldn't mind taking a look at the natural gas contract on the futures exchange.
Sure. I will do it intraday because we've talked about it long term that it's made these major moves that that down around that 2220 level that we've had some really significant spots, and we're forming a really nice bullish Gartley here on the intraday chart, which would take us down to about the 247 level. We're about 7 cents away from that. And that would be the 786. And we've talked about this several times on the air that this market has been, going against the 786, several times. And so around that $2.47 cubic feet is what I'd be looking for at that particular point. And in fact, there's several AB equals CD patterns that end up at that area. So that's where I'd be looking to buy it. Long term, I really like this. And we've been testing this 245, 247 now for almost a month, and it looks like it's going to hold. But below 240, then there's something wrong. So the risk here is really not very much, considering what your profit potential could be.
Okay, so and you broke up on me a little bit. Would you say 245? Did I hear that correctly?
247. 247. Yeah, 247 is the actual. If you'll go into the Tiger TV later and take a look at it, I posted it. It's a perfect Gartley pattern with an AB equals CD, and we were on the air yesterday talking about the 786 retracements, and that was the low yesterday was the 786 retracement, and we made a little ABCD intraday last night, and now we're ready to form this 247 price probably coming in. Sometime on Monday, I would think, would be the best time to take a look at it. So I'll be watching that one, on
the 247, are you looking at the, forgive me for asking, are you looking at the March contract or the April contract? I think you're looking at
I'm using the March contract.
Okay, because I'm looking at April. I'm like, wow, man, I'm at 269. That's a long way away.
No. The fact is that that's a good sign. The fact that the farther outs, the red options, as far as when they start, and that what I'm talking about to most people who don't trade commodities, as you move out from March, April, June, as those prices go higher, that means that the people that are in the business are anticipating higher prices already, either because they're seeing bookings for it or they're having a harder time getting supplies. So that's another reason. Now, if you have the nearby higher than the deferred, that means that the demand is right now, and it might not have good demand, out into the future. We did this with the corn options about a year ago when corn was bottoming. I don't know if you remember that, but
yes, sir.
Corn was real bullish nearby and bearish, far out. But as soon as the old ones went off the board, the new ones just took off like crazy. So these are things you have to watch when you're doing the futures contracts.
Sure, and from a technical standpoint, it says buy. From a fundamental standpoint, I don't know if you caught it over the weekend, Larry, but there's an awesome article in the Wall Street Journal. Because of the spike in oil and the downgrade in the price of natural gas, a lot of those drills or resources, I should say, dollars, from the mining companies are shifting into oil. So from let's say a longer term hold, whether it be through rolling the contracts on the futures or buying the UNG. From a longer-term standpoint, I would imagine the supply is going to start coming down a little bit. It's going to help from a fundamental standpoint on the supply-demand moving forward as well.
Yeah, that could be the case, but I have to relay an interesting story to you, David. When I had a mentor named Dave Nelson on soybeans, this was going back in the mid-'60s, and I was over at his house, and he was teaching me about the soybean market and everything, and I brought him an article about the Wall Street Journal. They were saying that there were so many soybeans around that the only use for soybeans would be spreading soybean meal on the floor of country and western bars, and he took the article, and he had a parrot, and he put it next to the parrot's cage, and he said, when the parrot's done with the bottom of this cage, he said, I will use this, and I'll get some value out of the Wall Street Journal. So
there you go. Hey, by the way, how's your friend Dr. Miller doing these days?
She's just doing great. She's not going to be able to drive anymore, but she's able to trade, and that's the important thing. She's happy as a lark. She's not in any pain, and she's going to be 89 in about 60 days. So it's really it's just a treat to be around her. John Hill, he's 88, and he's still trading every day, and all of his kids are. So it's
89 years old and still trading the market. That's amazing.
Yeah, and they enjoy it. It's like a giant backgammon game to them. And it's really, it's really something that.
So is she going to put out her own advisory letter and join the TFNN?
No. She likes to. Actually, she likes to. Well, I don't know if she's going to be able to, meet people like she did before, but she likes contact with people. She loves to talk to people if they call in and ask her questions and things. And she does do that quite a bit. As a matter of fact, if anybody would like to speak with her, her number is 217-382-1013. I think that'll be good for another week or so, and then she moves into an apartment where she will be taken care of. Well, she just can't drive. She'll be taking care of herself, but as long as she's got her monitor and her computer, she's going to be just fine.
Awesome. Well, Larry, thank you very much for taking my call. David. God bless you and yours.
Yeah, thank you. Well, she certainly has blessed us, that's for sure.
Thanks for
calling in. Yeah, thanks for calling in, David. It's really amazing, though, when he mentions Dr. Miller, because she was really quite influential in my life with the astrology part, and I certainly always appreciate everything she's done for me. And we need to get back to the markets because we have, this is a pretty interesting day. Now, we've had breakouts in the gold. We've had breakouts in the silver. We want to follow through with that here a little bit because we have now reached, in the silver market, we are approaching the highs that we made back in November. Now, we've already exceeded those in the gold market, but we have not done it in silver yet. Have to take a little break here. When we get back, we'll finish up with gold and silver, and then we want to finish.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Okay, we're back, folks. And we have a caller from New Jersey, John Corzine. Are you there, John? I guess this was a joke on Larry, but that's okay. He's probably going to be, the phone system there at Rikers Island probably disconnected him, but who knows. Anyway, we want to talk a little bit about the gold and silver because we have broken out to the upside. We've cleared the 618 in gold at 1770. Silver is back to the November highs. And so we're going to see if that breaks out to the upside. Now, the thing that we also should take a look at here is the fact that we have a breakout to the, we have completed a bearish-Gartley pattern in the, I'm sorry to break protocol here, but somebody posted something. It said Corzine had to hang up to let OJ make a call. That just cracked me up a little bit too much. Oh, well, this is all part of doing the show live. Who knows? I can't record it. But anyway, copper has made a bearish Gartley pattern up at this 390 level. We're retesting it really closely now, but it didn't break out to the upside. But the rest of the stock market. So frankly, it still is the Gartley pattern is still the same. All of these major things that we've looked at have completed major Gartley patterns, ABCDs. They're everywhere. Now they might fail, and this market might go up forever. But if you look at the volume and the advanced decline line and all the other things that are there, it's telling us that the market is probably closer to a major top than a major bottom. So we'll have to just wait and see if this is going to be the case. We have the next lunar event we have is on March the 8th, but we do have a pretty significant date coming in on next Friday, either the 2nd or Monday the 5th, and that will be an interesting one to look at. That'll be a week from today. And remember, there are 29 days in February this year. This is the leap year, and so there will be an extra. I don't know if that means anything calendar-wise, but there are 29 days this year in the month of February. The question that someone asked me was about the Treasury bonds. The fact that they have not fallen apart with the stock market rallying. They're just another asset class like anything else. They're much larger than the stock market. The bond market is, far bigger, than the stock market. That's why it offers, great, opportunities to move or to trade and stuff. But frankly, the Forex markets are by far the best thing to trade because they are so liquid. They trade longer. They trade 24 hours a day, 5 days a week. And gives you beautiful patterns on 5-minute, 15-minute daily charts. I mean, that's really the ideal thing to trade. I've been trading them for many years, so I've really migrated to that. And of course, I like the futures, crude oil, and gold. And so anyway, this is we want to end the show by got a couple minutes here, but this week, we've really gone, pretty much nowhere again in the stock market, and the relationship that we've had between, I want to bring out this divergence because it is really, really amazing, and that is the fact that the New York Stock Exchange Index has virtually gone nowhere, and yet the NASDAQ has actually gone, absolutely, crazy to the upside. And so that's really the main thing that we're really looking at. Anyway, so this is what we'll see what happens, and we'll go from there. But someone said that that we're making new 4-year high. Well, you are on certain things, but not in the stock market. You're not. Anyway, everybody have a wonderful weekend, and Tom and Steve will be back first of the week, and may God bless.